Welcome to the recap of the 7th day of trading this Apex Trader funded account, where I'm trading with Apex's money and keeping most of the profits and thankfully none of the losses. As of this morning, the account was at $50,391, a comfortable $2,000 away from the liquidation threshold. As you can probably tell from the thumbnail, this is about to change drastically. I saw some strong bullish divergence on the accumulation distribution line. AD was making higher lows when price was making lower lows. After a strong move upwards, I saw that VWAP, the 21 EMA, and the volume point of control were converging to potentially act as support for another leg up, so I went long at 38.9450. After getting filled, the trade initially goes my way and almost hits my take profit level before starting to consolidate. I know I've talked about needing to let my trades develop, but with stochastic RSI at overbought levels and with VPOC, which I was relying on for support, jumping up to potentially now act as resistance, my indicators were signaling warnings to me. Given these updated circumstances, I rationalized that it was necessary to update my profit and loss levels, so I do update them to plus and minus 2 points and scalp out for $100. I am glad I did exit this trade when I did, as price continued to chop on the way down. When price fell back down into the demand zone and stochastic RSI was back at oversold levels, I waited for evidence that buyers still wanted to defend this zone before I went long at 38.8350. The buyers did make an attempt to defend, but it wasn't a good one. Sellers overpower them and price gets pushed further down and it gets stopped out. Well, it happened again. Looks like I got bottom ticked, where price just touched my stop loss before reversing and going my way. After the new green candles formed, I redrew a new demand zone that seemed to be more indicative of where buyers were stepping in. The same indicators for a long entry remained, so I went back in at 38.8050. Well, those green candles faked me out as the buyers stopped showing up. Price continued to plummet through my stop loss again, and it looks like a downtrend has been established for the afternoon. After free falling for a bit, price finally finds some consolidation right above the next demand zone down. Unlike the previous two demand zones that were formed in pre-market action, this was formed during Friday's market hours, which tends to be more reliable. So I go long at 38.52. And just like the previous trades, it seems like once I enter the trade, the buyers just disappear. I get stopped out and yet another demand zone gets invalidated from this afternoon's heavy selling pressure. So after losing 3 trades in a row, I'm actually now on full tilt, and my stubborn brain is telling me that surely this next demand zone down will be where the reversal is. Besides, I have to end the day on a win, right? The fact that the demand zone corresponded with the bottom of a descending channel, which is a bullish pattern, gave me even more confidence, and I go long again at 38.36. I see that there's a little bounce after I get filled, and I take this to mean that there are buyers in this zone. So I average down at 38.32. I just wasn't thinking straight as a result of being on tilt. I'm watching the recording now and now see that this little bounce gets squashed so quickly, it definitely should not have been a signal for averaging down. But I do, and the result is getting completely wrecked for a $500 loss on a single trade. This demand zone actually does hold, as big buyers finally step in towards the bottom of the zone. I go for a really quick scalp here as I saw price start to get pushed out of this demand zone. Thankfully, was able to catch a small piece of the move, and I do end up ending the day on a win. I've usually found supply and demand zones to have high chances of reversals, which is why I took these long entries on a downtrend day. The problem with this strategy is that I'm trying to catch the initial reversal, which is just so risky. I should be waiting for the confirmation of the reversal and then make my entry during this second leg after a pullback. This will be my strategy the next time we see a strong trend. At the end of the day, I'd rather miss good trades than take bad ones. I've always known this, but the biggest challenge for me when day trading is that when I get on tilt, I don't think clearly and usually end up taking bigger losses. I noticed that usually I start getting tilted after I lose 2 trades in a row. The same thing happened on July 12th, which is the other big red day I had. Click on the card if you missed that one. From now on, if I lose 2 trades in a row, I will immediately stop trading, no matter how good a setup looks, because I just can't trust myself. When I'm not thinking clearly, it's so easy to just see what I want to see. This way, there's also a limit to the max loss for a day, which should help with making this funded account last longer. keep me accountable with a comment if you ever see me break this rule in future videos. So after taking a few small steps forward and a massive step back, the account is now at $49,451, just about $1,100 away from the liquidation threshold. I simply can't afford to have any more of these monster red days, so I'm sorry Wall Street bettors, this will be the last loss porn video on this channel. As always, thanks for watching. Please leave a thumbs up if you enjoyed. Hopefully y'all are learning a little from my mistakes. And subscribe to see if we can mount another comeback from this most recent setback.